Good afternoon and welcome to the daily wrap up with ForexAnalytix. And we're seeing a continuation of slow August trading here. The euro's kind of danced around. Mentioned here in the chat room, we would need to get a 30-minute close above 1085 to negate this downside for the rest of the day. And we haven't been able to pull it off. You can see they've attacked it a few times. Literally to the pit, but they've turned around and just given it right back up again. A little bit interesting if you think about what we're doing today with the bun, and we'll get to that. The bun itself went to new all-time lows as far as rates, went to minus 72, and you can see here new all-time highs as far as the price with the bun. Go finally. So we actually got up here and took out the highs up in here, right there. You see that? But look, we're pairing back now. And the reason I think it's rather important also is because we talked about this yesterday when I talked about gold, and I was saying, we were talking about the dollar, and I said gold doesn't react that much to the dollar. It does some, but really what kicked off gold, we've been saying that for months, is really the idea if we could break to new lows in rates. And over the last couple of months, we started doing that, and really it was the bun that really started kicking that off. But here's the thing is we went to new all-time highs in bun prices, new all-time lows in bun rates. And that was on top of an auction that we had this morning. And yet when you look at gold, you would have thought, wow, what did gold do? I mean, did gold jump up like $50 or maybe it might be a stretch? How about $15? Well, we didn't even take out the highs. And we were trading around the 43 area, and we basically jumped up a whopping $5. We come back and pull back. So now when you look at with the bun, you can see here on the 30 minutes, we'll come back in. If we do start to slide and correct, that will open the door for us to move lower here in the gold market. Right now we're looking here on the 30 minute. We'll take a look at it here on the 2 hour. So first testing would be right down here at 1525, with the potential really to move down here for value around, maybe a pit stop right there at 1515, and ultimately come down before you see a real decent bounce, probably about to 1505. So we're already seeing this here with the gold that you have to think is, okay, buns go to new all-time lows in rates, and forget going to new highs, forget challenging the old highs. We can only add $5 essentially. So it's really opened the door for us to then go on and potentially slide back. We'll take a look at it on the 30 minute. You see that right here? So we did get a jump, new all-time lows in bun rates, and all essentially we do is we jump up about $5. Maybe not even quite $5, might have been $4. And then we come back down, we kind of dilly-dallying around here. But if we do get the buns to slide, it may not happen immediately, but if we see some follow-through going to the next week, then we can see some more follow-through, I would think, in gold. We're looking also here in silver, looking at the spot. That's what we're looking at, spot gold, spot silver. Do the math if you want to look at it for the futures. But we paired back here now. Right here, 1812. We lose 1812 here on a 30-minute close. It's really going to start to generate some new selling, I would think here. I mean, the trend is still moving higher, but you'd start to generate some, we'll have taken out this area here on the close. You see that? Let's go and throw that in there. See how important that is right here? So you take that on a 30-minute close, and that'll start to generate some selling. And then it's just a matter of we can get some momentum to go on and change things around. But like I said, it's not going to happen overnight. You get a bullish market like this, certainly you have the opportunity. And if you think about it, if we were to pull down here, you almost have the inkling of a little head and shoulders here, but you have to let that all form. And actually the head, the top, isn't even much higher than potentially the shoulder. And quite often we always have to be careful with this because more often than not, we see head and shoulders where there really aren't a head and shoulders. And many of us, I've been one guilty in the past many times, thinking, okay, I see head and shoulders. It's really not a head and shoulders. And sometimes just a continuation, but we'll see. The day, I think Blake mentioned, the day is still young. We'll have to see where we close, but certainly the Bulls, after getting past the 79.12 and then moving up to 79.22, and now here we are at 78.96, starting to look a little bit tired here at the very least. May open the door for us to pair back. S&P certainly came back. Blake talked about this on the FACE webinar about some rebalancing and why you could quickly see this market pop up. And boy, did we see it pop up. Now, we're going to move into the main page, but I'll tell you what, there's just not a whole lot of action happening here. You can see here with the euro. Now, yesterday, you remember afternoon, I was kind of trash talking the euro, and I gave you the reasons. I mean, why we've been so long, we haven't been able to get a rally. You think about, the rally the turnaround that we saw on, on Friday, and we would have thought we would have seen a lot more follow through. And, I think the only thing I will say about the euro right now is that, although it's certainly weaker, lower bond yields are what has dragged this euro and kept it from moving higher. I've called it for the last couple of months as bonds started moving to new highs, inversely new lows and rates. I call it the ball and chain. Every time the euro tried to get up, something would happen with the bonds and kaboom, we just start to slide right back down the pole again. The only thing is the euro is coming off a little bit, but like I told you before, if you're here with the European crossover webinar, we talked about this, and my support today on the bias chart is 1053 because that was my concern, is that we could goose some stops here. And if we go too much lower, we could quickly slide off of that. And I guess to a certain extent, you're seeing this, we've seen a little bit of a bounce, but it's only 10 pips essentially from bottom to top here. Maybe if you stretched it, maybe it'd be 12 pips. So that was my concern, is that we could actually slide down quickly to 50 or 60. And I was telling people, be careful. I'm not saying you have to turn around and sell it now, but we mentioned this yesterday. Bears are coming in here and just selling this market with impunity. And essentially, they're not even worried about it, And when you look at it from a technical standpoint, we talked about this on the European crossover webinar, is that, we talked about the importance previously, remember, about the 1160. Well, and how I thought that by the time we got to Jackson Hole, I thought we'd already be close to the 1160. Now, we eventually got there by the end of the day, but I thought from there we could have taken off. Had we been, I thought the expectations were that Powell would be, open the door for allowing for more cuts and stuff. But obviously the euro stayed weak for so long throughout the week. It was frustrating. As I mentioned to y'all, I bought it on the way down thinking, oh, it's a great value mine. It just kept going lower and lower and lower. We popped up. But when we came into on the Sunday session, all the other markets were popping up with big, nice moves, and the euro was only able to add on, an extra 10 or 15 pips maybe. So it's really a disappointment, and since then we've seen the market just go lower and lower and lower. Well, once again, now the 1060, the 1160, is just a level at this point. To me, the bears don't even get worried unless this market gets above 1220. Actually, I apologize, 1213 on a daily close. A daily close. Other than that, that's what I'm talking about. These bears are going to be selling this euro with impunity. Man, come up to 1125, sell it. Come up to 1160, oh, fantastic, I'm getting a better fill. Come up to 1180, okay, no problem, I'll take it on. So like I said, it's not until we get a daily close above 1213 is it bears will say, well, you know what, maybe it's trying to reverse. Doesn't mean they're going to be shaking in their boots, but they'll be, concerned. My point being is that there's a lot of room up in here, and as I mentioned yesterday, and you're seeing it continue, is these bears are just simply selling it with impunity. And it's like, I'll sell it. I don't care. I'll sell it here. Oh, it's a 1096. Okay, I'll just go and sell it anyways. I think it's going to 108 anyway. That's not what I'm saying, but I'm just trying to characterize how confident many of these traders, and how can you argue with them? Seriously, because as I mentioned before, we talked about this yesterday. There's a reason why this thing is down in the dumps and hasn't been able to recover. Then on top of that, Germany, the engine of the Eurozone, is now essentially pretty much, we haven't done it yet, pretty much locked in 2 consecutive negative quarters, or they will be locking in 2 consecutive negative quarters, which is going to be a recession. They're the hub of the Eurozone. So where's this thing got to go? I mean, yank the submarine horn, because it certainly looks like it's going to go down, down, down. And of course, we have the ECB coming up. They're looking to go on and do more stimulus. There are some concerns that maybe they'll hold off because what happens in Brexit. Somehow I kind of think that Brexit thing's going to work itself out before we reach the end. So I think the ECB, I don't think they're going to wait until the 31st of October to determine. I think they're just going to come in and hit it now in September. So once again, you keep seeing more and more reasons to sell it. Honestly, it's probably doing pretty good that it hasn't broken yet. But my concern is that it will break. And when it will break, when it does break, I would not be getting in the way of this thing, because when it slides, it may slide through lickety quick split fast. Other than that, not a whole lot. We are seeing the dollar peso work a little bit higher. We have a bias chart resistance at 20.05. Dollar yen is relatively quiet. Look at these tight ranges. You would think that this was a, maybe a 15-minute bar. These are 2-hour bars. Nothing really happening here. Kiwi is still continuing on its move lower. And you look at the Aussie, we know that DeBell, the second in command, if you want to call it there, at the RBA, he's liking those low rates and think it's the best thing for them. So and thought it was better in light of what their trading partners, I guess, i.e. China, what they're going through the difficulties and the problems with the trade war, it's going to be more advantageous. So that's going to keep the Aussie weak. Cable kind of bounced up around here. I've tried to play it light this week on everything. I don't want to get sloshed around. Maybe last week, buying this euro on a drop where I thought it was a value buy and holding this sucker, and finally didn't get paid until Friday, but has kept me really cautious as we go into the last week. I'm heeding the advice of what Pipsar said on the week ahead video, which was, hey, look, expected it to be a quiet week. And if you think about it, we've already had the fireworks from Friday from Jackson Hole and the follow through coming into Monday. I mean, yes, we've seen good moves in the metals and we've seen good moves in equity, but in the FX, man, I've been calling it Halloween trading. It's Deadsville, so there's not really, I mean, you get a couple little bounces here, little jerks, but, to me, you're fodder for the people that are just pushing it around. So I have no real interest. I did try and step in here on the cable, but it missed my entry by a couple of pips. But even then, it wouldn't have fallen that much. I mean, I was going to maybe grab 10 pips on it or something like that. And I did not want to get stuck in this quicksand of the euro. So I'm just hanging back. I mean, like I said, might as well wait till we come back from holiday. Last week of August, Europeans are on holiday. We had a UK bank holiday at the beginning of the week. I mean, now U.S. traders are going out the door for the Labor Day weekend. Like I said, push something if you want, but I just don't see where the advantageous actions are really, unless you're trying to scalp it. And one thing is scalping, you got to have some liquidity, and I just don't really see the liquidity, which, I mean, trading is getting lighter, and we just don't have any ranges, so. But gold's rather interesting with what we're seeing here with the Boon. And other than that, that's about it. We will see y'all tomorrow. Good luck trading. Get ready, as I think the volatility will continue. We saw the peak of that as we came out of Jackson Hole, and then we saw it follow through. I think September will probably be a rocking month. So get ready, and we will see y'all tomorrow. Thanks for joining us here on the Daily Wrap-Up.